Title: Don't buy car insurance in 2026 until you watch this, save $1,000 plus. If you're about to buy car insurance in 2026, stop right there. Because what I'm about to show you could literally save you over $1,000 this year, and most Americans have no idea this even exists. Insurance companies are counting on one thing: that you won't ask questions. They want you to accept the first quote, click buy, and move on. But behind the scenes, there's a completely different pricing game happening, and once you understand it, you'll never overpay again. Let's break it down. Automobile: the $1,000 mistake almost everyone makes. Here's the truth. Most people don't actually shop for car insurance, they just compare prices. Sounds the same, right? It's not. When you go to one website and compare 3 to 4 companies, you're only seeing a tiny slice of the market. There are over 50+ insurance providers in the US, and many of the cheapest ones don't even show up on those popular comparison sites. That means you could be missing out on hundreds, even thousands, in savings. And here's the crazy part. 2 people with the same car, same city, same driving record can get quotes that differ by $800 to $1,500 per year. Why? Because insurance pricing is not standardized. Each company uses its own secret formula. Light bulb trick number 1. Never accept the first quote. This sounds obvious, but most people still do it. You get a quote that looks reasonable, and you think, this is probably fine. That's exactly what they want. Instead, treat your first quote as a baseline, not a decision. Always check at least 5 to 7 different insurance providers, including smaller, regional companies. Some of the cheapest insurers in 2026 are not big names like Geico or State Farm. They're smaller companies that focus on specific states or driver types. Magnifying glass tilted left trick number 2, change this one setting, huge savings. This is where things get interesting. When you're filling out your quote, there's one setting that can dramatically change your price. Backhand index pointing right: your deductible. Most people choose a low deductible like $250 or $500 because it feels safer. But here's the reality. If you increase your deductible to $1,000, you could lower your premium by 20% to 40%. Let's do quick math. Monthly premium, $200. Increased deductible new premium, $130. That's a savings of $70 per month. Which equals $840 per year. If you're a safe driver, this is one of the easiest ways to save big. Chart decreasing trick number 3, stop overpaying for coverage you don't need. Insurance companies love to bundle in extra coverage. Sounds good, but most of the time, you don't actually need it. Here are a few things to double-check. Rental reimbursement. Do you really need it? Roadside assistance, you might already have this through AAA or your credit card. Full coverage on older cars: if your car is worth less than $4,000, full coverage might not make sense. You could be paying for protection that gives you almost zero real value. Brain trick number 4, your credit score matters a lot. Most people don't realize this. But in many US states, your credit score directly affects your insurance rate. A higher credit score signals to insurers that you're less risky. The difference? Someone with excellent credit could pay 50% less than someone with poor credit, even if their driving record is identical. So before you renew or buy a new policy, check your credit score. Fix any errors. Pay down small balances if possible. This alone can unlock serious savings. Calendar trick number 5, timing is everything. Here's a trick almost nobody talks about. Backhand index pointing right: the day you buy insurance can affect your price. If you wait until the last minute, insurers see you as a higher risk buyer. But if you shop 7 to 14 days in advance, you're seen as more responsible, and you often get lower rates. Yes, it's that subtle, but it works. Telephone receiver trick number 6, call them, don't just click. Online quotes are fast, but they're not always the cheapest. Sometimes, agents have access to hidden discounts, custom bundles, special promotions. When you call, you can literally say, "Hey, I got a lower quote from another company. Is there anything you can do to beat it?" You'd be surprised how often they come back with a better offer. Direct hit trick number 7, stack discounts most people ignore. Insurance companies offer dozens of discounts, but they don't always apply them automatically. Ask about safe driver discounts, low mileage discounts, good student discounts, bundling home plus auto, defensive driving courses. Stacking just 3 to 4 of these can cut your bill significantly. Warning: the biggest secret of all. Here's what insurance companies don't want you to know. Backhand index pointing: right loyalty does not pay. Staying with the same insurer for years doesn't guarantee lower rates. In fact, many companies slowly increase your premium over time because they assume you won't leave. That's why smart drivers shop their insurance every 6 to 12 months. It's one of the easiest ways to avoid overpaying. Moneybag final thoughts: don't rush this decision. Car insurance isn't just another bill. It's one of the few expenses where spending a little time can save you hundreds or even thousands of dollars every single year. So before you buy insurance in 2026, compare more companies than you think you need. Adjust your deductible strategically. Cut unnecessary coverage. Improve your credit profile. Shop early. Ask for discounts. And never stay loyal without checking better options. Because the difference between a smart buyer and an average one isn't luck. It's information. And now you have it. If this helped you, make sure you don't make the same mistake most people do, overpaying without even realizing it. Your future self, and your wallet, will thank you.